I want you to picture a scenario for a second. It's a Tuesday morning. You are a product manager or maybe a lead developer at a tech company, and you've just spent the last, I don't know, 6 to 8 months building this beautiful, sleek enterprise resource planning system, an ERP.
Right, the kind with the snappy interface.
Exactly. The code is clean, the user experience is polished, and you are finally ready to launch in a new market, specifically Lithuania.
Which, by the way, is a fantastic market for tech. Very forward-thinking, very digital.
Absolutely it is.
Yeah.
So you run your language files through a translator. Maybe you use a high-end AI or hire a freelancer. You get your strings back, you hit deploy, and you pop the champagne. But then disaster strikes.
And you get that dreaded silence after launch.
Actually, worse, you get noise. A lot of noise. The tax authority rejects your data files immediately. Bank transfers start bouncing across the entire country. And your users, the actual accountants, sitting in their offices in Vilnius, they're staring at their screens, completely baffled.
Oh no, because the software is telling them something completely nonsensical.
Right, because the interface is literally asking them to open a library instead of loading the general ledger.
Yeah, that sounds like hyperbole or just a really bad developer nightmare. But based on the documentation we're looking at today, that is a very real possibility if you just blindly translate things without knowing the context.
It is the classic localization nightmare. And that is exactly what we are unpacking today. We've got our hands on this fascinating piece of documentation. It's a development dossier simply titled Lithuanian-development.pdf.
I know, it sounds super dry.
It does. It sounds dry, but trust me, stick with us. Because this document is basically a survival guide. It is a literal map of the minefield you have to walk to localize software for the Lithuanian market in 2026.
It really is. And what I think is most compelling about this source material is how it completely shatters that very common illusion we have in the tech world. We tend to think of localization as, just a front-end task.
Right, like a cosmetic thing.
Exactly. You just swap some English words for Lithuanian ones, change the currency symbol to the euro, and boom, you're done.
A simple find and replace job.
Yeah, but this dossier shows that for Lithuania, localization is actually a brutal back-end architecture challenge. It's this incredible intersection where linguistics crashes headfirst into strict tax law and banking protocols.
I mean, we are talking about the massive 2026 VAT overhaul, these incredibly strict public sector reporting standards, and a level of linguistic precision that, if you ignore it, literally breaks the compliance logic of your application.
And the stakes for the user are incredibly high. We aren't just talking about someone being annoyed by a typo.
No, we're talking about legal compliance.
Yeah.
In 2026, Lithuania completely overhauled parts of its VAT system and public sector accounting. If a developer gets a single country code wrong or translates a credit note incorrectly, the state tax inspector at the VMA, they just reject the files.
And then the user faces massive compliance nightmares, penalties, and your sleek new software becomes effectively useless to them.
So our mission today for this deep dive is to walk through this dossier. We're going to look at the tax hikes hitting in 2026, the linguistic traps that can literally break bank payments, and my personal favorite part, this massive audit of over 400 translation strings that reveals the huge difference between Google Translate and actual professional accounting.
It's such a great case study in precision.
Let's start with the hard numbers.
Yeah.
The regulatory landscape effective January 1st, 2026. The dossier outlines some major financial shifts. What exactly are we looking at here?
Well, the first thing that jumps out is that the government is tightening the screws a bit on revenue. So we're looking at the corporate income tax, the CIT. The standard rate increased from 16% to 17%.
Okay.
And then for qualifying small businesses, their reduced CIT rate bumped up to 7%.
So a 1% increase across the board, basically.
Yeah.
Now, from a developer's perspective, that sounds trivial. You just change a variable in the settings menu, right?
Ideally, yes, if you built your system correctly from day one. But you would be shocked at how many legacy systems, or even modern quick build apps, have tax rates just hard-coded right into the calculation engine.
Oh, right. If you have 0.16 buried deep in a stored procedure somewhere, your software is now generating illegal invoices the exact moment the clock strikes midnight on New Year's Eve.
Precisely. Software cannot just guess these rates. But honestly, the CIT change is the easy part. The much bigger headache for developers, the thing that really disrupts the fundamental data structure, is the VAT overhaul.
Yeah, I saw this in the notes. The source material highlights that Lithuania didn't just tweak the rates, they actually abolished an entire tax bracket.
They did. They took the old 9% VAT bracket and abolished it entirely.
That's a huge change. Usually you just adjust a percentage up or down, but deleting a category completely, that breaks your mapping.
It disrupts everything because they introduced a new 12% reduced rate, which covers accommodation like hotels and passenger transport. But here's the real kicker, and this is where it gets highly dangerous for utility software.
Okay.
Centralized heating.
Heating?
Yes. Centralized heating used to be on a reduced rate, but as of 2026, it moves to the standard 21% category.
Oh, wow. So if you were building billing software for a utility company or a massive property management firm and you didn't catch that shift,
And you just lazily mapped the old reduced category to the new 12% one.
you are undercharging tax on heating by a
Yeah.
massive margin. You're charging 12% instead of 21. That tax liability for your user is going to accumulate instantly.
Exactly. And the dossier actually explicitly warns developers about this. There's a very specific technical note in the text. It says developers need to rename the system text Lingvatini's 9%, which means reduced 9% to Lingvatini's 12%.
Right.
But then they have to manually move Ildemes, that's sheeting out of that reduced category entirely, and push it into the standard one.
So this is a full-blown data migration project, not just a simple software patch.
It is, because if you miss that mapping, the calculation error propagates through every single invoice generated in January, and trying to clean that up with the tax authority later is a nightmare.
It's amazing how a seemingly simple legislative change just instantly becomes a database migration project. But let's move from tax rates to something that seems even simpler on the surface, but is actually a total technical minefield. Geography.
Yes. The countries and ISO codes table?
The dossier spends a surprising amount of time on this. It explicitly states that the system must align with the State Commission of the Lithuanian Language, or the VLKK.
Yeah.
I have to ask, why is a language commission dictating back-end database tables?
Because in Lithuania, official financial reporting requires highly precise naming conventions. You cannot just use the English name Germany in your interface or your dropdowns. It has to be Vokietisch.
And the United States?
The United States has to be Jungtinės Amerikos Valstijos.
Okay, but playing devil's advocate for a second, isn't that just a display label? Does it really matter for the actual code running underneath?
It matters immensely for the code, specifically for the ISO standard, because the source points out a critical technical gotcha involving SEPA payments. That's the single euro payments area.
Right, the standard European bank transfer system.
Exactly. The first two characters of an IBAN, the bank account number, must strictly match the ISO country code in your system.
So if I have Germany listed as GE in my database, because I was just guessing, instead of the standard DE,
Then your validation fails. The payment file gets rejected by the bank because the IBAN prefix doesn't match the country code logic. But it actually gets even stricter when we talk about the tax authority.
how so?
The dossier mentions a critical check for document types. If a user creates an export invoice or an intra-community acquisition, the user interface must actively force them to enter a country code.
Why force it, though? Why not let it be optional if they don't have it on hand?
Because of ISF.
The tax authority's file format.
Right. The VMI system acts like a strict bouncer at a club. It will automatically reject any ISSF XML file that has missing country data for those specific transaction types. So the types table in your database isn't just a list of countries for a front-end drop-down menu. It's essentially a compliance engine.
If the geography is wrong, the tax reporting fails.
Exactly.
That is a perfect segue into what I honestly think is the most entertaining part of this source material, the translation audit.
Oh, this is fascinating stuff. This is really where the rubber meets the road.
So the source contains this massive review of translation strings, specifically IDs 1 through 437. And reading between the lines, it looks like a developer originally used a literal translation, maybe an automated tool, and then an actual Lithuanian accountant went through and rigorously corrected it. And the differences are hilarious, but also functionally crucial.
It really highlights the difference between just speaking Lithuanian and speaking accounting.
Let's unpack a few of these because they are great. Look at ID 16. The English source string is open set of books. Now, in accounting software, a set of books is your company file, your financial database. The original translation provided was atvertiniu rinkina,
which is grammatically correct Lithuanian, but it literally translates to open a collection of reading books.
like a library.
Like a literal stack of novels on a table.
Imagine you are a CFO. It's year-end close. You are stressed out of your mind. You open your expensive new financial software, and the main button asks if you want to open the library.
It destroys trust instantly. It makes the tool feel like a toy. The correction in the dossier is atverti apsekaitos domenis, which means open accounting data.
That immediately changes the tone. The first one feels amateur. The second one is professional.
It's all about intent. Then there is ID 30 and 31. In English, we have debtors and creditors. The original translation was perkiajai and tikajai, which just means buyers and suppliers. That seems close enough, doesn't it?
I mean, logically, if I sell to a buyer, they owe me money. If I buy from a supplier, I owe them money. It works in a basic sense.
In a general business sense, yes. If you are running a small coffee shop, that's fine. But in a formal accounting ledger, you need absolute precision regarding liability. The correction changes them to debitorii and creditorii.
Borrowing the Latin roots.
Exactly. This signals to the user that this software handles the actual financial liability, the asset and liability columns on the balance sheet, not just the list of people you buy your milk from. It's a fundamental shift from a point-of-sale mentality to an actual ERP mentality.
Now, here is one that I think would genuinely confuse a user physically. ID 46. The English is input post to ledger. The original translation implied sending mail.
Right, because post is a very tricky word in English. It has multiple completely different meanings. The correction here is registruoti, to register or record.
Because in Lithuanian accounting, you don't post an entry.
You register it in the books. If you leave the mail translation in there, your user is going to be staring at the screen looking for a stamp icon.
Or they think they are literally emailing the ledger to someone.
Exactly. And then we have the age analysis, ID 65 and 270. In English, accountants talk about an age analysis of debts, meaning how old are the unpaid invoices.
And the original translation was something vague, like period breakdown, right?
Yes, like a tarpio eiklotinas, which is incredibly vague. It sounds like a calendar view or a scheduling tool. The correction is skolashino jimo analyza, meaning debt aging analysis. That is the specific industry term.
It tells the accountant exactly what they're looking at.
It tells them, hey, this is the report you use to calculate your bad debt provisions. If you don't use that specific phrase, the accountant might not even realize that vital report exists within your system.
There are some really subtle business logic changes, too, not just terminology. Look at ID 76. The English is backorder listing. The original translation was nepristatsi prekio sorashas, which is list of undelivered goods. But the correction is volovanaichish ushsekime usaras, list of late orders.
That is a huge nuance. Undelivered just means it hasn't arrived yet.
Yeah.
Maybe it's on the truck. Maybe it's not actually due until next week. But voloijanchu implies it is late. It is overdue.
It implies urgency.
Right, an urgency and a problem that needs to be solved immediately, which is exactly what a backorder report is designed for.
And we definitely cannot ignore the VAT terminology here. ID 375 and 376, inclusive amount and exclusive amount. The correction changes these to summa su PVM, sum with VAT, and summa B PVM, sum without VAT.
That is purely about clarity under pressure. Inclusive is vague. Inclusive of what exactly? Shipping, handling fees.
Right.
With VAT is explicit. In a high-pressure environment like a year-end closing, you absolutely do not want your accountant having to mentally translate the word inclusive to mean with tax. You want it spelled out perfectly.
Speaking of high-pressure environments and year-end closing, let's talk about the digital tax man, because the source material talks heavily about integrating with IMAS.
Yes, IMAS. This is the smart tax administration system in Lithuania. It's essentially the digital backbone of their entire economy. The dossier mentions two key components that developers must integrate with, not ISAF and I.VAZ.
Now, ISF is the invoice register, right? We touched on that earlier with the country codes and the XML files.
Correct. It is a mandatory monthly submission of all sales and purchase invoices in an XML format. And the deadline for this is incredibly strict. It's the 25th of the following month. If your software cannot generate that XML schema perfectly by the 25th, your client is instantly non-compliant.
And what about IVAZ?
That is for electronic consignment notes, basically digital waybills for road transport.
So moving goods.
Moving goods inside Lithuania. It's designed to track inventory in real time to prevent tax fraud. If you are a developer building an inventory module, you have to push data to IVAZ the exact moment that truck leaves the warehouse.
That is intense.
Mhm.
And the dossier also brings up a specific set of standards for the public sector called VSS. And apparently there were big updates in 2026 for this sector too.
Huge updates. And this is a critical warning for developers. If you are developing software for state-owned entities or municipalities, you cannot use the same logic as you do for private companies.
Why not? I mean, an invoice is an invoice, isn't it?
Not in the public sector. The 2026 update standardized all the report forms, and crucially, it removed the distinction between primary and other activities in their financial reporting.
What does that actually mean for the code, though?
It means your document type logic has to branch completely. If the client is a private company, you follow the Lithuanian business accounting standards. But if the client is a public sector entity, you have to follow VSAFAS 2026. You essentially need two entirely different accounting engines running under the hood.
So you can't just take the same software box and sell it to a local coffee shop and the city council.
Not without a massive toggle in the backend settings that fundamentally rewires how the reports are generated.
It's incredible. You look at this PDF, and at first glance, it's just a list of translated words and ISO codes. But when you really dig into it, you realize it's a structural map of an entire country's economy.
And that is really the core takeaway here. Localization is so often treated as an afterthought in software development. You just get the strings translated at the last minute and ship it. But this dossier proves that localization is the feature.
Absolutely. Think back to that review and correction section we looked at, where they changed credit note from creditinas documentas to creditina de soscaita. That is not just a semantic debate between linguists.
No, it's not, because documentas is just a generic document. It could be an office memo, but soscaita implies a financial bill or invoice with actual legal standing. If your software issues the wrong one, you might be invalidating the tax reclaimability for the recipient. Using the wrong word in this context is exactly as dangerous as a calculation bug in the code.
It really makes you think. We always blame the back-end developers when the software crashes. But in a case like this, the translator is literally holding the keys to the castle.
It connects right back to that idea of the types table being a compliance engine. We saw how the heat and tax rate moved categories. We saw how the ISO codes lock directly into bank validation for SEPA. We saw how the translation of a set of books determines whether you are taken seriously by a CPA.
It actually raises a really provocative thought to end on for you listening. If a single mistranslated word in a user interface like writing post instead of register causes a user to file their taxes incorrectly, or if a missing country code causes the VMI to reject a massive corporate filing, at what point does the translator become legally liable as a developer?
That is exactly the gray area we are rapidly moving into. When the code and the law are this tightly integrated, language isn't just communication anymore, it's execution.
Definitely something for you to mull over the next time you hit update on your business apps. Thanks for joining us on this deep dive into the surprisingly high-stakes world of Lithuanian accounting software.
It was a pleasure.
Catch you on the next one.